Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, March 31st. We got end of the month, end of the quarter. So it'll be interesting. Now we're wrapping up the first quarter of 2017. So next month we'll start seeing some of the data for the quarterly earnings and stuff. So it'll be interesting to see what first quarter provides us to the start of the year. Now, let's take a look here. We got a lot of economic news releases and some actually important ones here to go over today. Actually, more or less, they're all high impact ones. We got personal income, as you can see, last month or back in January went up 0.4%. Forecast were supposed to have the same amount, 0.4%, and it did. Came across the board, 0.4%. So two good months here from January and February both went up 0.4%. So we got a nice growth curve there for our personal income. However, on the other side of the spectrum, we got consumer spending. We had a 0.2% increase in spending in January. Forecast supposed to continue that same trend at 0.2%. It only went up only 0.1%. So we're kind of seeing that people are saving more money. Obviously, if they're making more money and they're not spending it, so therefore we're probably seeing a bigger portion of people saving their money here. We also got core inflation. This is the PCE, or personal consumption expenditure, and when you strip out the food and energy, we get what they call the core PCE, or core inflation. And this is the gauge that the Fed looks at for our main inflationary number here. So back in January, we had a pretty big increase of 0.3% in January. Forecast was supposed to be 0.2% for February, and it came in at 0.2%. So this did bump the overall year-over-year number from 1.7% to 1.8%. The Fed's target rate is approximately 2%, so they're waiting for it to go up. So if we're not approaching that anytime soon, if the economy's not heating up as much as they think, you're going to probably start seeing that maybe they might start holding back on raising interest rates. The reason why they raise interest rates is the short-term interest rates is to stave off inflation, keep it from overheating. And right now we're still not seeing that. So it did go up a little bit, but let's keep an eye on that to see if it starts taking off even more. So if it starts getting a little hot, you're going to start seeing the Fed raise it even more frequently. Chicago PMI, this is in manufacturing in the Chicago region. Anything above 50 in this type of index is basically regarded as expansion. We had a slight improvement here, so February was 57.4, and it improved by 0.3 to 57.7. So decent numbers in Chicago, so we're still seeing manufacturing with some decent results here. Consumer sentiment. This is the final version of the consumer sentiment. We usually get two of them each month. For February's number, this is February's final number at 96.3. Forecast for March is supposed to go up to 97.6. It improved, not quite to expectations, so disappointed a little bit, selling it at 96.9 here. So, and you may see a part of that with the whole policies going in here. You know, we had a lot of talk about the healthcare in the beginning, and then at the end they're kind of fizzled out. So that may have played a part in people's sentiment as to the economy and everything else, and maybe things that were talked about maybe may not move forward. So we'll watch that and see if that continues to improve, and of course, you know, see if it's a trend of watching the policies, if they go through or not, like I said, the healthcare, the tax reform, and the infrastructure building, stuff like that. If those get delayed, maybe we may see consumer sentiment kind of drop or continue to drop or not, or if it continues rising or not. So let's watch, see how that plays out here. Right now the stock market is down, but we did see NASDAQ kind of peaking up earlier today, so this may switch over to a mix. I have seen NASDAQ kind of popping up for the quarter. You know, all of them went up. Dow actually has 6 straight quarters. This is the best it's been since consecutive improvement in quarters since 2006. For the month of March, however, it looks like it's going to be down for the month, but we had such a strong quarter that it looks like it could be positive. NASDAQ had a huge quarter. It actually went up about 10% in the first quarter. So, and then S&P basically is going to be flatline or basically unchanged. There wasn't a whole lot of change in S&P for the quarter on this. We had a couple Fed speakers. We had Dudley, not much again, out of the ordinary. We had like Fed basically, Dudley out of New York kind of saying that he thinks it will be reasonable to have 2 more rate hikes this year. And then I think the other one that was spoken basically said that it would be I think they're kind of watching to see if it's warranted or not. Continuing with the rate hikes. He didn't specify a number or anything, but I think he's just kind of watching to see where the inflationary numbers and everything else see, because I think he watching. The consumer sentiment may have played what his thinking was. See if they may need to continue raising rates, or just kind of watch and see where the economy is moving and stuff, if it's warranted or not. Let's take a look at the bond market. Again, we're kind of flying in between here. We're up about 16 basis points, so we have an improvement yesterday. So we're kind of in this range here. We've been kind of hovering in this range here, as I kind of mentioned here, and we're getting to a point where the 10-day and the 100-day are going to meet up, and it's going to squeeze us one direction or the other, and a very good chance we'll probably get squeezed lower. So therefore what that means is that we'll probably have higher rates coming up. So it might push us lower on the totem pole here, as that's the long-term trend. That's what's going to seem to be what's happening here. But right now, we're kind of, as you can see, we're not breaking above the 100-day moving average, nor are we really busting below the 10-day moving average. We've tested it a couple times, but we bounced back. We started basically right at the 10-day moving average, and now we're up. And right now, we're about 16 basis points, kind of reclaiming the lost leads we had. So as you can see, we kind of start here, drop down. We start kind of up slightly, but we basically gain those back. Then we start here and we drop. Oops, sorry about that. And drop back down, and now we start back down here and we're back up again. So we're playing this range of basically sideways movement, and we're going to get squeezed here further we go out, and at some point we're going to get pushed probably by next week here. So just be very cautious. You may want to lock in if you have any interest rates out there floating. You may want to kind of lock in just for safekeeping here, because again, if anything, we're going to probably get pushed lower and have rates start climbing a little bit more. All right, folks, have a great weekend. Thanks so much for watching. If you guys want more updates throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter. I do post updates throughout the day. Also, if you guys need any refinance or purchase, I do help people out with, I am a loan originator, and I do help out people with the refinances and purchases. Have a great weekend. We'll see you guys on Monday. Bye-bye.